All right, hello, welcome traders. It is December 17th, 2024. We're a week away from Christmas Eve. Trying to make some money here in the market. We are pretty much flat so far for this week. Haven't moved up or down much of anything since last Friday. Pretty much a flat day in the markets. Uh, S&P down, bonds were up, oil's pretty much just flat. So a whole lot of nothing going on right now out there. But for us, it's all good stuff. We let theta continue to work. We are up so far for the month of December in, again, only 7 trading days so far. But we're up 28,973. So 28,973 for the month. So fantastic month so far. It's not over. Things can go higher, things can go lower. We'll see what happens, but we're having a great month. But what I want to do with you today is I want to share 6 futures trades, all going to be using the exact same strategy. No, it's not the 1-1-2 strategy. No, it's not put credit spreads. No, it's not naked puts. Okay, we're going to show some opportunities today, at least in my opinion, for 6 really good futures trade opportunities using one of my favorite strategies, and that is the Strangle. So let's get into this. Let's take a look. Let me share my screen. Let's take a look at least from a technical perspective. Let's see what we're looking at. So number one here is oil. So oil, I think, looks really nice for a strangle trade. I mean, had you actually got a strangle trade on 2 months ago, you'd have had a beautiful trade because this thing has been just sitting in this sideways consolidation box. Now we can actually extend this box out a little bit further. We've been in this thing for 2 full months. But one of the things I want to make sure that we look at is when we're looking at strangle opportunities, there's 2 things I look at. Okay, really the 2 cores for me is number one, are we really sitting in the middle of the Bollinger Band or 3 ATR bands, which means you got to be close to the 21-day moving average. Okay, and both on the weekly chart, which has more weight for me because I like to trade 90 days out for strangles. I don't like the 45 DTE stuff. Okay, I like the 90-day out stuff. Typically, they come off in about 30 days for me. So it's a pretty good opportunity for me to get in. I get a little bit more premium. I get a little bit wider width, a little bit more safety. I get a little bit lower volatility out there. So I think it's a perfect setup for me personally, and I'm just sharing you what I'm doing. So here we go on this. We've been, again, consolidating really for months in here. Nice down day today, which gives us a nice little opportunity, I think, to get in. One of the things that I think that's also unique is I look to find an RSI trading between 40 and 60. If the RSI is between 40 and 60, okay, that also improves my win rate. And I have also back tested this strategy and used it for quite some time. So I like it sitting in the middle of those ranges, around that 21-day moving average, which we're like almost dead on the daily, and we're pretty close to it on the weekly. We've got 46 RSI weekly and a 51 RSI, so we're really dead in the middle of the RSIs. And if you look at just anything else that's going on, look at the stochastic momentum being oversold and starting to curl up on the weekly, but yet being overbought and starting to curl potentially down on the daily. That kind of yin and yang is beautiful stuff for me. I like to see the weekly and the daily kind of go in the opposite directions. I think that really bodes well for Strangle. So number one Strangle, oil. Okay, let's keep moving on down the list. Let's look at bonds. Bonds had a decent little day today where they kind of held their value. We're sitting right at, in what I view as a pretty good solid support level here at about 115.5. If we go out to the weeklies, okay, you can get a little bit better of a view here. So where are we on this? Well, we're a little below the 21-day moving average, but we're not significantly far from it. But we're a little below it, but I'm okay because I really see bonds as having a little bit of weakness near term. Yes, the Fed is probably going to cut 25 basis points tomorrow. It's pretty much a guaranteed certainty, okay, with a percentage point of error here or there. Right? But then I think they may pause. if they pause and they don't keep cutting rates, and you could continue to see bond yields continue to rise from here, at least slightly, which would mean bonds would fall. So I think bonds have more risk to the downside than they do on some kind of massive reversal to the upside. And the fact that we're down essentially almost 6 sessions in a row, and today wasn't down, but it was pretty flat. I like that. So we're getting, the lower bonds get, the better I think the strangle sets up. Now we are at the 40 RSI here on the weekly, and we're only 35 on the daily. Again, the weekly holds more weight for me. It's a little low, but I like the fact that bonds are down here in this level. And I think if we look at IVR, here at 26.1 on the IVR, excuse my voice, which is not bad. So I think this looks decent. You are oversold on both the weekly and the daily. Here, excuse me, just trying to make it through today. All right, so this is not the best scenario, but I love the bond trade. And I think if you go out a little bit farther than 90 days, I think this really sets up pretty well. All right, so there's bonds. Let's look at gold. Gold, pretty much trending sideways. You could actually draw something similar to this. And you've been in this box, give or take a couple days on the up and the downside, but you've really been, in fact, we can probably stretch this out even a bit more. Okay. So you've really been in this sideways consolidation on bonds as well. They're dropping a bit, which I think helps. You're sitting right at the 21-day moving average pretty much on both of these, the weekly and the daily, which is perfect for me. And if we look at the RSIs, 57 and 47, overall, I think gold is also a strangle opportunity here. So I think you can get gold. Let's keep going on metals because the next metal, okay, is copper. So copper also looks like a pretty good setup. You're hitting right around just below the 21-day moving average on this thing. You are oversold weekly. You were overbought weekly on the stochastic momentum on the daily, but you were oversold on the weekly. You continue to move sideways. It's not as much of a trading range, but if we look at this range here, okay, we've pretty much been in a fairly tight range from 4.1 to about 4.3 for the most part. We could probably shrink this thing down just a tad to about that 4.3. Some weakness here on copper. Is it breaking down? It is breaking this symmetrical triangle. It's not the best setup from that standpoint, but it does meet most of my criteria. I think when things are dropping too, they make better strangle opportunities. I don't think copper's falling out of bed. I think it's in a good shape here. And again, I like the weekly chart right in between the Bollinger Bands, right in between the 3 ATR, and they seem to be converging a bit as well, which means volatility is starting to contract. We saw that something similar on gold starting to contract in the Bollinger Bands on the weekly. All right, so I think copper also sets itself up. Let's just stay with metals here and let's look at silver. Something similar happening on silver. Okay. For the most part, staying in this trading range now for many, many, many weeks. Yeah, you're right at the 21-day exponential moving average on the weekly. You're just fractionally below it here. You're at this trend line. You're at support. Okay, so maybe silver holds up in here. You're at 51 RSI weekly, 44 RSI on the daily. I think, again, silver also sets itself up. And then if we want to take a look at one more thing here, the last one to cover with you guys today, trade opportunities is, we've also been in this range for some time now. On the RTY, which is the Russell. So on the Russell, okay, you're right at the 21-day moving average on the daily. You're a little bit above it on the weekly. Bollinger Bands still expanding a tad to the upside, but the 3 ATR bands are starting to pinch in. RSI 57 and 46 respectively, which meets my criteria. I think you can look at an RTY as a strangle. And again, I'm more concerned with the downside on some of these and the fact that several of these have been selling off. RTY selling off a bit, copper selling off a bit, gold selling off a bit, silver selling off a bit, and bonds selling off a bit. So all of these to have a little bit more risk to the downside. Well, we've dropped lower, and I think you could potentially see some reversals or starting to hang out in here. If we drop a little bit lower, that's okay. There's plenty of support levels, I think, below these. I don't see them cratering anytime soon. So I think these are three trades that you can be looking at today. My setups on them, as always, I like to go out about 90 DTE. I'm looking at 7-ish delta or so on the puts, around 6-ish delta on the calls, depending on what the skew looks like on these. I'm going to manage them at about a 50% win-loss rate, and I'm going to have a stop of 1.5x. Okay, or actually a max loss of 1.5x on the trade, which is a 2.5x stop on these. I'll be looking to put several of these trades on in the next couple days. So hopefully this is helpful for you. You find a couple trade ideas, find one that may fit your criteria, okay? And do what's right for you. Follow your own plan. Just sharing with you what I'm doing, but having a great month so far, up 28,973. We keep cooking along. We keep making money, generating that income on a monthly basis. We'll be back with you guys later. I'm actually going to come out with another video this evening with 5 stock plays for you. So I'm going to give you 5 stock plays. Stay tuned. Check that out. If you like this video, give a thumbs up down below and feel free to join our YouTube channel here if you have not already done so. Have a great rest of your evening, folks. We'll see you. Take care.